Well, for my students, I have arranged one case study because of the debut of the chemcon, especially chemicals, in Indian stock market. So we will firstly take a look what is about the IPO, the initial public offering, because this case study related with the chemcon, especially chemicals. That is a company basically incorporated in 1988. In 1988, it was incorporated as a very small unit that used to supply the chemicals to some indigenous and some even multinational pharmaceutical companies. But suddenly in 2020 in September they entered in the IPO segment. They hired some lead managers and merchant bankers, and while writing their red herring prospectus, they entered into the stock market. And to my surprise, it has outperformed all the IPOs recently launched in the pre-academic or in the during pandemic age. During pandemic age, and oversubscribed. It was the offer price was somewhere in the 340 rupees, and finally it was when it was listed in the secondary market, it has got reached to that level of the 730, and it was very good opportunity for the the new entrants, those investors who were able to buy this IPO in the primary market, so they earned a lot of profit. So let me begin with what exactly is the IPO about, and then we will discuss other things about. So that is the initial public offering or stock market launch is a type of public offering in which shares of a companies are sold to institutional investors like QIB or the retail investors. QIB are basically the qualified institutional buyers. They may be the financial institutions, they are the banks, they are the foreign institutional investors and mutual funds. And I skipped one point here, that is insurance companies. Insurance companies are also one of the financial institutions, those who are involved as a part of the QIB. And retail investors, of course, IPOs underwritten by one or more investment or merchant bankers who also arrange for the shareholders to be listed on one or more stock exchanges like in India. So they usually have merchant bankers or the investment banker. They underwrite their shares. In addition of that, they work as a catalyst. Either they can increase the supply of shares in the market, in the secondary market, or they can subside or reduce the supply of shares in the share market, because to arrange the price level of the scripts. So that is what happened in the case of this chemcon, when it was today is the 1st October 2020 it is listed in the secondary market, and opening price was 730. So it was a big opportunity for in fact all kinds of investors, either the small level or mid level or the large investors like FIIs or some mutual funds. They become so much active to see the performance of this IPO, because the company is itself not considered to be falling in the category of the blue chips. It is a very small unit from Gujarat, India, and they entered in the primary market, and they accumulated their desired capital, oversubscribed. I think I read somewhere the 40 or 45 times, and opened on the premium over 115%. So just take a look some small the elements of IPO basis of allotment. The basis of allotment is a document, actually it is containing the basics on which equity shares are allotted to successful bidders. IPO bid represents the price at which someone is willing to buy shares in IPO. Basically, IPO bid is determined by the promoters with the help of the merchant bankers and investment bankers. For an example, again I will take the case study of that chemcon. So the offer price was decided by the merchant bankers and the promoters of the company that 340 rupees, and the lot size in the next part, which is given here, the IPO bid lot. IPO bid lot is the number of shares. This is a minimum number of shares which have to be applied for an investors. Minimum number of shares. So that was somewhere 45. It was available in the 45 number of shares. That is the lot size of the chemcon. So IPO cutoff price. IPO cutoff price is the price decided by the company based on the demand of IPO shares. As I have told to my students that the IPO cutoff price was considered 340 rupees. This is a minimum level, minimum price level at which this is available for the investors, for the FIIs, for the other institutions like insurance companies, like the mutual funds, and even for other QIBs. So IPO draft prospectus. So this is what the prospectus. This is a first legal document that is company filing to the Security Exchange Board of India prior to proceedings with an initial public offering. Then IPO listing date. Why I am telling you all these related terminologies related with the IPO? Because of the debut of this chemcon chemical company, because you need to know the basic terminologies, basic elements of the IPO. IPO listing date, the date on which shares are officially quoted on the designated stock exchange for the trade. So for an example, in that case, the chemcon is listed on the 1st October 2020. It is listed on both the stock exchanges of the Indian security market, that is NSE and the BSE. IPO oversubscription. This is also one of the elements which students you must try to know, under subscription or subscription or at par. So this IPO has undoubtedly oversubscribed. So why? See, the demand has exceeded the supply of shares in the IPO subscription process. That is known as the oversubscription. IPO underwriters. These are also very important to understand, because they are the institutions which every company requires if they are willing to go in the primary market. So initial public offering underwriters are group of representatives from investment banks. So not necessarily that they are the investment bankers, maybe sometimes they are the merchant bankers, because investment bankers are nowadays a novel concept. Previously they were known as the merchant bankers. So there are certain limitations, and they have this right to exercise the green shoe option GSO, which I will be discussing in the next lecture, because it is very complex and sometimes very essential to be known. Now just take a look this chemcon Specialty Chemicals Limited. It was founded in 1988 in Gujarat, India. So the current price which I have mentioned here, that this 595 is running price, but when it got opened in the market, so just take a look here. I will highlight also this, the price that was the opening price 731, and also that high, because after that it started getting down. At it is not the matter of the panic, because when it happens, so the buyers who entered in the primary market and they bought who invested in the IPO of that chemcon Specialty Chemicals Limited, so they must start booking their profits. So that happens usually when the company is oversubscribed and listed in the secondary market. So the price is obviously going up because of that demand in the market. The supply of the shares is limited and the demand is exceeding in the market. Those investors, they also get active. Those who were not able to invest in that share due to some or other reasons, or they were not interested, or they underestimated the value of the chemcon specialty chemicals limited. So now they stand chance to buy that shares in the market.